Hey everyone, Eric here. Got a question from a lady I have had the pleasure of interacting with a bit on the YouTube channel. Her name's Teresa, and she was curious about the portfolio visualizer. Sorry about the noise, there's some folks outside. She was curious about the portfolio visualizer and pretty much how I use it, which is a really good question because it's a really, really great tool. So here are the four main things I use the portfolio visualizer for. Backtesting, correlation, Monte Carlo simulations, and then portfolio optimization. So what I thought I would do and spare most of you my handwriting is actually just pull up the website and walk through it with you. I just got to get my stupid face out of the way. Good. So when you go to portfoliovisualizer.com, I'll also link it in here. This is where you land. I personally don't use any sort of paid subscription. I just use their free version. It's robust for most of my needs. So the first one, to back test our portfolio, this is the link we want, the middle one down here. So you click that, this will pop up. So what I like to do is adjust this to be a little more recent. So I like to do 2000 to 2020, but you can look at it any time frame you want. And then you can choose to include current year or not. And then you can choose however much you want to put in, whether or not you add money, all that kind of stuff, which is actually really helpful. And then this is kind of the fun part. You get to put in your different tickers that you want to look at. And you can look at some pre-made portfolios if you want. You can also do 3 different portfolio allocations. So I just did a really simple one here with SPY and then TLT. And then first portfolio is just the SPY. Second portfolio is 75% SPY, 25 TLT. And then the last one's 50-50. So then you just hit Analyze Portfolios, and boom, it produces a bunch of different results for you. First, you get a nice portfolio growth chart. You get this return profile. You also can take a look at what you're exposed to, different metrics, annual returns. So there's a lot of really, really great tools to pull from here. And I think that overall, this is probably one of the most used functions for me on the page. Next up is asset correlation. So we would go over here to asset correlations, third from the top, and this window will pop up. So all you do is type in the tickers that you want to see separated by a comma then a space. You can select a time frame if you choose. I typically just leave it blank, and then I hit View Correlation. So this is a rolling correlation for the previous 36 months. As we know, correlation relationships between different products change over time. So you can change this to be as recent as 12 months or as far back as 60. 36 is kind of an industry standard, so I just leave it at that. And this is, really, really helpful to take a look at the correlation between all of them in a very simple table. So you kind of have your X and Y axis, and you just match them. So Apple to Apple, obviously, would be nothing. It's the same thing. But Apple to Facebook shares this kind of correlation, Apple to Disney, this correlation, and so on and so forth. And essentially, this ranges from -1 to +1. +1 being a perfect correlation, and then -1 being a perfect inverse correlation. So what that would mean is for every $1 product A goes up, product B would go down $1. And then the way to read these is for every $1 Apple goes up, Facebook would go up 22 cents, or vice versa. So typically there's different accepted ranges for correlation. I would argue anything that's like 0.4 or higher would be relatively strongly correlated. If you're around 0 somewhere, it means that they're indifferent to one another. They don't move in any observable fashion to one another. And then same thing to the negative side. If I see something negative 0.4 or higher, that typically would, implicate some sort of inverse relationship. So that's what I use that tool for. Next up is the Monte Carlo simulations. So that's down here. And Monte Carlo simulations are helpful just to kind of tinker with different portfolio setups and different scenarios that we can see unfold. For example, this is a 30-year simulation starting with a $25,000 initial investment with an additional $2,000 per quarter added. And you can change all different criteria in here. So then you can just, after you finish going through all your different inputs, again, whatever assets you want to include in there, there's a bunch of different choices for you. You can allocate it however you want, and then you can just run your simulation and see where different percentiles would land you. And this just essentially is giving you a summary of probability of things landing in certain places. So Monte Carlo simulations just help let you view different outcomes. And then last up is portfolio optimization. So that's out of this box right here, dead center, so third one down from the top. And if I go over there, this is what pops up there. This is where we have the ability to check out a couple different tickers. And what it does is it will help you maximize the Sharpe or Sortino ratio, which is how you optimize a portfolio. So for example, you finish, setting up your pieces up here. Again, optimization goal is up to you. You can, see what makes the most sense, which is kind of cool that it gives you the ability to look through different examples. But then what it does is you put in the tickers for your portfolio. You can put your current allocation, whatever your desired allocation is, and then you can say, okay, I want to set a minimum and a maximum for different tickers so that this way, if you don't want certain things falling out of a parameter, you can dictate that up front. So you just hit optimize. And then what it'll do is it'll show you your current portfolio, what that looks like, right? So the provided portfolio. And then it'll show you one that's optimized to whatever you picked. So this one's the maximum Sharpe ratio. So although this one is a maximum Sharpe ratio, it didn't outperform our portfolio, which is the goal. That's what we want to use to do to make sure that our portfolio is set up as best as we can have it. So that's how I use portfolio optimization. And quick recap, that's how I use Portfolio Visualizer as a whole. It's honestly a tremendous tool. I absolutely love it. Again, I have absolutely no affiliation with them whatsoever. It's just a free tool that I like to use. And if you have any other questions on it, let me know. I am pretty familiar with it because I like to use it a lot. Awesome. I will talk to you all later.